It's happening. The stock market crash is finally happening. I mean, if I didn't know any better, I thought we're already in a market crash since 2022. But apparently everyone is panicking and everyone is on full sell mode because the second biggest bank in the United States has collapsed. Now, what does this mean for you? What does this mean for me as a heavy Tesla shareholder? What does this mean for the entire market? And what should we be doing? In this video, I'm gonna be explaining why we shouldn't be panicking and how you as an investor can benefit from this terrible mess. But first, we gotta talk about how we got into this situation first. Smash that like button and subscribe if you haven't already, man. Let's get into it. So the second largest bank, which is called Silicon Valley Bank, has collapsed on Friday officially. It got so bad that the FDIC had to come and take over because nobody could really withdraw their money, aka the bank was empty. So what happened? To make a long story short, I'm sure most of you guys watching this already know what happened. But pretty much what happened, we had a bunch of startups that went to this bank that got accepted because no other bank would really accept them. And this is a very strong point for later on in this video. But in 2022, Silicon Valley Bank accepted pretty much all the startups. I'm sure they had a decent filter, so not all of them could get in. I mean, the good ones, but majority of them got accepted into this bank. And in 2020, man, if you guys remember in 2020, everybody was depressed. They were at home, questioning life. Do I really want to be an employee? Why don't I start my own thing? And we had the massive startup company run. Literally everybody was doing this because it was the best time to do it. So at that time, no other bank would accept startups because they're extremely risky. Imagine an individual coming to you saying that, hey, look, I have $1 million raised, but I want to start this business. Great, what's your profit? I ain't got no profit. I'm starting today, tomorrow, and I may not be profitable for many years to come. Please help me. Most banks will help you out if you have profits, but if you're a startup, the chances are, the 100% chance is zero. But Silicon Valley is like, nope, you guys come on in, you come on in, you come on in, we'll help all of y'all out. So what happened from 2020 to 2021, we see their balance sheet, their assets go from 70 million to over $200 billion. Sheesh moment right there. But wait, what did the bank do back in 2020? Well, at that time, interest rates were at zero, and banks being banks, they want to make money from the capital that they have, from all the startups that brought in their bank and, put it places that it can grow. That's what all banks do. So instead of putting those assets in central banks because they were giving literally 0% at that time, they did the second best thing and they put it in mortgage-backed securities. At that time, it wasn't a big deal for them. They're like, you know what, if we need the money, we can just sell it and we have the money there. So there's no biggie. And hey, we have all this inflow of people coming in because they're doing startups. They don't want to be employees anymore. They want to be leaders and all that stuff. They want to be their own boss. So that's not an issue. But fast forward to 2023 and things have changed. Government rates or the central bank is about 5 to 6%. Not many people are doing startups as they used to back in 2020 because we're not in lockdowns anymore and everyone's going back to work and not depressed anymore because they're working. And selling mortgage-backed securities has gone a whole lot harder. So Silicon Valley Bank was pretty much stuck. You had majority of your cash, majority of your assets stuck in a mortgage-backed securities. At the same time, you had those startups back in 2020 or 2021 burning through the same rate of capital. So you guys see what's happening here? Not enough inflow of new startups. Majority of money stuck in the bond. And then you got the same folks back in 2020, 2021 burning through the cash. This is a massive problem. But wait, it gets worse. In this situation, what the bank does is that they sell their mortgage-backed securities at a loss. And on top of that, it's really hard to do when you have interest rates this high. Not only that, the juicy part where everyone started to panic is the company decided to raise capital, and that's when everything hit the fan. Everybody was saying that, oh my God, they can't pay the liabilities, they're losing their money in bonds. I need to get my money out of their bank, so everyone goes on a bank run, and we get the result that we see today. No one can withdraw their money, which is just a big rip moment for them. And that's why we see the FDIC step in so everyone can hopefully get their money one way or the other. And also that's why the stock dropped literally 60-70% in a single flipping day. I mean, that's absolutely insane. Sheesh. Now, two things you guys may be wondering is that, okay, are we gonna see a massive market crash? And second, how, as a Tesla investor, how is that going to impact me? Well, let's start off with the first concern. Is there going to be a massive market crash? Well, as you guys already know, in the stock market, everyone is emotional. It's an emotional roller coaster. So most likely Monday, which I think will be today. Hopefully I can have this video up on Sunday, but if it's Monday, most likely everything is going to be down because everyone is on full panic mode. And I wouldn't be surprised to see people going to their local banks and doing some withdrawals as well, even though they don't need to be. The panic is just absolutely stupid because the situation isn't really that bad. You see, guys, this is not crypto where the money goes away and, we don't know where the money went. Silicon Valley Bank has the money, but it's in the mortgage security backed base. That's where it's at. It's in that bond. Now, getting that money will take some time, and the FDIC will make sure that will happen. So really, I don't think we should be panicking as much as we are now. But you know what? Bring on the panic. Bring on the sale. I would love to buy Tesla stock on the flipping cheap. What I predict what's going to happen is that the FDIC is going to come and pretty much solve most of the problems. As I just mentioned, is that, hey, look, you got the money here, we're just going to get it out and give it to everybody. There's no panic, and everyone's going to go back to normal sooner than we all think. That's why I'm saying this panic is so flippin' stupid. But again, bring on the panic, man. Love to buy on the cheap. Now, it's unlikely that other banks will be going through this as well because, again, they don't do these types of investments. They stay away from them because they know the risk. So I don't think other banks are going to get hit and we're going to see a whole meltdown like we saw in 1929. This is a specific problem for Silicon Valley Bank and for Silicon Valley Bank only, not for other banks, not Bank of America, not America Trade, nothing, none of them. They're not gonna have any problem. It's not gonna spill over because they don't do these things and they have pretty good backings from the government and they got great balance sheets. So I don't expect a big bank run against all banks. That's in the past and I don't think that will happen again. But hey, I could be wrong and we could probably see it again, but I highly doubt that. I'm gonna give it less than a 5% chance for that happening. Now, what does this mean for Tesla investors like you and I? I mean, if you're watching this video and you're a viewer of mine, then you are a Tesla shareholder. And as you guys know, I'm going all into Tesla stock. So what does this mean? Well, our boy Elon Musk on Twitter said he is considering to maybe buy Silicon Valley Bank. And as we all know how this story plays out, we're probably going to see Tesla stock double digits in the red on Monday. In fact, I think it's going to be the most red stock on Monday because Elon Musk came and said, hey, maybe it's a good idea to buy a bank. I don't flip it, no, but Elon is being Elon and, Tesla stock is volatile. So expect a big red day, maybe a red week for Tesla. Maybe going back down to that 150s, 140s. Man, I don't even know anymore. But what I do know is that it's going to present a fantastic, great buying opportunity. And I'm gonna be licking my lips. Sell? No, baby. I'm gonna be buying. But again, guys, as I say time and time again on this channel, Tesla stock is a 5 to 10 year investment. And Elon Musk, yes, he's the helm. And if he buys Twitter, if he buys Silicon Valley Bank, if he buys another company next, yes, it's gonna impact Tesla stock one way or the other. Whether the company is doing 100 billion in profits in a year or 25 billion or 30 PE, 50 PE, whatever it's doing, it's gonna take a hit because it's Tesla stock and it's Elon Musk. It's just how it is. The question is though, can you see the opportunity here or not? Can you put your emotions on the side and actually use your logic and look forward to seize the opportunity? That's a question for you to answer. For me, it's very clear cut. Tesla one day will become the world's most valuable company. Not too sure if it's gonna surpass Aramco and Apple combined. Maybe it will, I don't know, but one day I do see Tesla hitting above 5 trillion valuation. Now, that's long term. Most of us here who are panicking right now is because of the short term and we can't see the long term because of this. So with that, I made a video here about Tesla stock to see if it's a good time to buy right now and predicting how low it can go and what my price target is to buy a whole lot more and go more all in. Check it out here, guys. Support the channel by becoming a channel member and getting some go all in merch and wall poster, and subscribe if you haven't already, man. I shall see you guys in the next video. See ya.